right, we got the first part of the news today, and so far, let's say so good. We had Bitcoin at 21,100. There was a pullback before the news came out, but now we've got Bitcoin up at 21,700. But as I said, it's only halfway there. We've got one announcement, and that's the PCE, and the PCE personal consumption expenditure was good. But now we've got the big test, and that's Chairman Powell speaking at the opening of the Jackson Hole Symposium. What is he going to say? Well, we're going to watch that with you guys live. We're also going to talk about the PCE and what it means. And then we're going to be trading because there's a trading competition on. So let's do this. Let's have some fun. It's Friday. There's no banter. We're here to have fun. And as I said, I hope you got your whiskey, your popcorn, and your Xanax. We'll take them maybe even all together. Jimmy, you know what I realized? You loaded up my new sound without actually loading up my good morning song, my beats of my good morning song. Anyway, we're here and we have one objective today. And the objective today is to be the most fun and biggest place to watch Chairman Powell's speech live. We know there are other channels streaming the speech live, including the Fed themselves. But you can see I've got the Fed's feed right here. There's 859 people waiting here for the Fed speech. But we're going to be bigger. We've got 3,500. We're going to be the biggest channel in the world, bringing you Powell's press conference live. We're going to be watching the charts while Powell is talking. Anyway, so if you're new to the channel, welcome, welcome, welcome. If you're part of the fam, welcome back. It's Friday. Usually we banter on a Friday. Today we're not bantering because today it's all about the data and Jackson Hole. So that's all about today. And we've already had the first part of the data. So we're going to talk about that. We're also going to be putting in trades in the trading competition because let me tell you, I was far down and then the market recovered. So I'm back in 365th position. Not great, but if Powell's speech plays out correctly, I'm leveraged long, and we'll talk about what my leverage trades are. All right, so let's do this. Remember, I'm going to do what I need to do. You're going to do what you need to do. Invite your friends to come and watch this with us. Let's make this the biggest viewing party in crypto. I'm going to have fun with you guys. I've just ordered a whiskey. James is going to get me a whiskey. Jimmy's going to get me a whiskey. And let me put the volume up. How's that? Better? How's the volume? Better? All right, so I'm going to get a whiskey now, and I'm going to have a whiskey with you guys. Feel free to join me with a whiskey and a Xanax if you want. I don't know if you can say that on YouTube. Can you say that on YouTube? Get a Xanax. I think so. Yeah, Xanax whiskey, and we'll do this together. So, all right, let's look at the data. Let's start off with the data. So we had the PCE data. Remember, PCE is what the Fed use as a more reliable measure of inflation. So when the PCE numbers drop, it means that inflation is dropping. And the reason for that is because the PCE removes anything related to energy and food. And the reason why it removes anything related to energy and food is because those things can be manipulated. And we know that the Biden administration is manipulating the price of energy and oil by tapping into the strategic reserves. So just because the oil price is coming down doesn't mean demand is actually coming down for oil. Someone says Viagra here. Who's long? I mean, what's going on here? What? Smash up the like. Let's get everybody to watch this. We got 4,471. Is there anybody else streaming this at the moment that we should know about? No one important enough. Well, the Fed's streaming it. They got 859 people watching. Who else is streaming it? I think Cryptos R Us must be streaming it as well. But we got to beat them today. All right. So as I said, the PC numbers came out. Now we can see various bits of good news in the PCE data. The first thing is that the PCE, the core price, the PCE price index went down 0.1%, which means that the inflation as measured by this measure is down 0.1%. And hopefully that's a sign that the inflation has bottomed, that inflation has peaked. And that's what everyone's counting on. But that's not the only thing. I need some ice with my whiskey, bro.
There's no ice in the building.
There's no ice in the building. You can't drink a hot whiskey, bro.
It's very good whiskey.
What whiskey is it?
Man, whiskey.
Cheers, bro.
Blue label.
It's actually really nice. It's much nicer with us, but it's really, really nice. All right, so the price index, the actual core measure of inflation, of PCE inflation, down 0.1%. This is the measure that the Fed used. What's more interesting there is if you look at the expectation before the event. So let's quickly just see what the expectation were. The expectation was 0%. It went down 0.1%. What we also saw, though, was we also saw 2 or 3 other measures which were very good. The first thing is personal income was up 0.2% versus 0.6%. Now, remember, Powell wants to reduce personal income because that's going to reduce inflation. You got U.S. personal spending up 0.1% in July. People thought it was going to go up by 0.5%. So the economy is starting to slow. The core price index up 0.1%, but we've also got a 0.1% change, bringing it down, bringing the inflation down. And that is what the Fed's looking at. And you can see that it's the first time that we've had a decline in this measure since April 2020. And the reason why we're all here today is because Powell is going to be speaking. And I guess when Powell speaks, he has to look at the data, right? I mean, he's got to look at the data and speak around the data. And the reason why this is so positive is because when Powell speaks about the data, you've got CPI now coming down. Remember, the last time we had CPI came down by 0.5%. You've got PCE coming down. You've got the housing prices. You've got housing slowing down. So let me show you what the housing market looks like at the moment. So that's the housing market. That's the supply of new houses on the market. Usually when there's so much supply of new houses on the market, the price of housing goes down. And that's, again, something that's going to bring down the inflation rate. As soon as these numbers came out, remember this chart over here, which is what the Fed are expecting. We're now, yesterday it was about 64% of people were expecting 75 basis points. Now it's back down to 54.5. And I guess when Powell's speaking, this is going to go down to 50-50. So let's see what happens. I think it's going to go more towards the 50 basis points. And remember, I was one of the people that said in September we may get 75 basis points. So that's where we are. It's not only Powell speaking today. We've got a whole lot of other people speaking. We have Bostic speaking from the Fed. We have a whole lot of Fed officials speaking. We'll actually look at what they are speaking about in a second. But I think first, let's just look at the charts. Okay, so how did the charts respond to all of this? So you have Bitcoin at 21,700. Interestingly, if you're watching the 1 hour charts, which is what we were trading because we're a bunch of DJs in this office, the 1 hour charts went all the way down to 21,120. This is when the PCE data broke. We had a candle up all the way to 21,900. Now we're back down at 21,700. So that's what Bitcoin's price is doing. Let's look at the NASDAQ. The NASDAQ, I hope that what's happening here is we're not turning support into resistance. So you got this trend line over here. We went over the trend line. We went under the trend line. And I really hope that we close above this trend line and don't use that as a retest. So that's what the NASDAQ is doing. Then you've got the dollar index. This is the one that's encouraging me the most because there are 2 options here. The first option is that we made a higher high here, which is what Carl says. Carl and El Capo, obviously. The second one is that this is a double top, and that's what Gareth Soloway says, okay? So, yes, everyone says Carl is always short. He is. He's like 5'6", no more than that. He's always been 5'6", and he's not going anywhere above 5'6". He's always short. Carl's always short. Yeah. Yeah, Carl's 5'6". It's not getting any longer than that. It's short. That's it. So you've got the Dixie coming down. Look at the Dixie. The Dixie is now under 108. That's the most encouraging sign because the markets haven't responded to that. And I mean, I think it's too soon to say if it's a double top. My money would be on a higher high, but it does look like it could be a double top. And then you've got the US 10-year Treasury yield. Now, this is where we've got another telltale sign. This is the yield on 10-year Treasury bonds. For those of you who don't really know how this is significant, we're looking at the interest rate. And the interest rate, the 10-year Treasury yield dropped down to, I think, 3% or 3.017%. So that's coming down. But again, everything here is around what Powell says. And before that, we've got all the Fed speakers speaking. In fact, they're all speaking now. I should have a live feed of all of them speaking. Okay, let's see. Is there a live feed? Okay, here we go. So let's see who's speaking and what they've been saying. People saying my Dixie is never short. Okay, so this is actually Bullard, and Bullard actually spoke, if I'm not mistaken, Bullard spoke yesterday. And Bullard said rates aren't high enough now. But remember, Bullard is basically Kyle and Il Capo's cousin. He's always negative. He's always bearish. He's always hawkish. He's Il Capo and Kyle's second cousin. That's Bullard. Bullard also said, so that was Bullard. I think there was some more around Bullard coming out. My baseline is that inflation will be more persistent than what many expect. So Bullard coming out quite hawkish off the blocks. Then we had Bostic, Raphael Bostic. Here's a segment of his interview on CNBC with Steve Eastman.
So you get to the 3.5, 3.75 range, and is your idea that you stay there for a while?
If we see the data, if we see the economy continuing to slow in the ways that I would hope it would, I'd be comfortable staying there and just sitting there and letting the policy play out, letting the economy absorb what we've done, and then hopefully it will get us closer to the 2% on its own.
So I think we have a chart there, Fed rate outlook, which is how the market is priced. The market has these cuts built in after it reaches a peak rate of 380. Would you suggest that the market is sort of wrong to have those cuts built in?
I think that's premature to think about that.
There it is right there.
We have a fair amount of evidence, if you look at from a historical perspective, that when the Fed does a start and stop, that actually exacerbates the situation and makes it harder for inflation to really get to the target. So I want to hold, make sure that we're getting to the target. A word I'm starting to use a lot more now is resolute and purposeful, to say once we have an idea and a strategy, we've got to stick to that and only let the exceptional outcome drive a move from that.
What would it take for make you feel that, hey, we've got inflation under control? When you see the numbers today, Rick, who does a wonderful job, I think, laying out those numbers, I could never do that. It's come down. It was a peak of 5 and change before. Now it's down to 4.6. So there has been a downward trajectory. Do you feel like you're confident that maybe we're on the right track here?
I'm hopeful we're on the right track. You know, as a central banker, we're supposed to be skeptical and nervous all the time. And so I'm going to continue to do that. I do think we're starting to see some positive signs. We're seeing, particularly on the good side, inflation is really starting to come down dramatically. Services are still trending up, so there's still work to do. And we're just going to have to continue to monitor the economy to see what's happening.
All right, so he is, I mean, half bullish, half bearish, half hawkish, half dovish. We do not currently have a recession in my forecast. I'm leaning towards 50 basis points in September. It's premature. That's really bullish. It's premature to think about cutting. I agree on that. I want to get to my target and hold. If we see the economy continue to slow, we could stay at 3.5, 3.75, which is exactly, I mean, 50-50 from Bostic. Like half good, half bad. And there are a lot of other Fed speakers speaking today. So let's see what happens. He's forecasting 50 basis points, or he's in the minority, but ever so slightly. We got Powell on in 5 minutes. What else is there to talk about? So let's talk about the trading competition while Powell is talking. He shouldn't be talking. He only starts in 5 minutes. Let's have a look here. He only starts in 5 minutes. Don't worry, we got you guys covered. In 5 minutes, we'll be live. While we're here, let's talk about the trading competition. So, are we the biggest channel in the world broadcasting this?
I think so.
Can you check for me? Can you please make sure that we are the biggest channel in the world? Here we are in the competition. So these are my positions. I opened a Cardano long. So I've got a Cardano long. I got in about 48 before the market came down. So I'm slightly down on that. I'm up on my near position. I'm down on my rune. Currently, I am in 359th place. We see that there's 252,522 of us this time. And that means that the prize money's gone up. So right now, the prize money goes into this category over here. And the total prize money is $55,000. So the winners actually win more. Remember, there's 7 days left. Registration closes in how long? Registration closes, I think, today. I think you have to register by the end of the day if you want to join us. Okay. I think I hear Powell. Okay, you can hear that we're going live now with Powell. If you want to register for the trading competition, you go to this video over here. You click on this link over here. That will get you signed up for the trading competition. Remember also that if you want to win a full Bitcoin, if over 200 people sign up for CoinStats in the month of August, they're going to give away a full Bitcoin. Click this link over here. Sign up if you want to sign up. I think it's a great service. And then if last time there were about 140 people signed up, so it could be we're very close to 200. All right, let's see what's going on. I hear voices. They're not voices in my head. Hope you guys have got your whiskey ready. Your Xanax in the other hand. Has anyone got a Xanax? Oh, really? Okay, hold on. Hold on. Okay. Hold on a second. Let's just see what's going on here. Okay. I'm watching it live. I don't do herbal. Come on, bro. You should know better. I don't do herbal. Okay. Okay, let's get
Please take your seats. Please take your seats.
Okay, everybody take your seats. Okay, so wait. I think. Yeah, take your seats. Everybody take your seats. All right, everyone take your seats. Take your whiskeys. Let's do this. Okay, so my goodness, they have 7,000 people watching them right now. And so do we. Fam, smash the like button. Let's get our friends in here. Let's give us some love. Okay, they've got 7,400 people watching. We've got to beat them. We have to beat them. All right, we're waiting for Powell. Should be on any minute now with his opening remarks. What I want to do is I want to get the Bitcoin. Let's get a 3-minute chart. Let's get a Bitcoin 3-minute chart. And let's get a NASDAQ 3-minute chart. Okay, there we go. We got the charts ready.
So good morning and welcome everyone to the first session of the 2022 Jackson Hole Economic Symposium. Jerome Powell, the floor is yours. Please come to the podium.
All righty, Powell's walking to the podium. I've got my Bitcoin chart open.
Thank you, Peter, and good morning, everyone. Esther, thank you very much for the opportunity to speak here today. At past Jackson Hole conferences, I have discussed broad topics, such as the ever-changing structure of the economy and the challenges of conducting monetary policy under high uncertainty. Today, my remarks will be shorter, my focus narrower, and my message more direct. The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The burdens of high inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses.
I haven't seen Powell shake before.
These are the unfortunate costs of reducing inflation.
He's shaking.
But a failure to restore price stability would mean far greater pain. The U.S. economy is clearly slowing from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. While the latest economic data have been mixed, in my view, our economy continues to show strong underlying momentum. The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers. Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. So we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the Summary of Economic Projections range of estimates of where the federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause.
So far, nothing new. So far, nothing new.
July's increase in the target range was the second 75 basis point increase in as many meetings. And I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections at the September meeting. Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. And in particular, we're drawing on three important lessons that I'll highlight. The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bankers and others once needed convincing on these two fronts. But as former Chairman Ben Bernanke has shown, both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. Our responsibility to deliver price stability is unconditional. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on aggregate demand. None of this diminishes the Federal Reserve's responsibility to carry out our assigned task of achieving price stability. There is clearly a job to do in moderating demand to better align with supply. We are committed to doing that job. The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time. Today, by many measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households, businesses, and forecasters, and of market-based measures as well. But that is not grounds for complacency, with inflation having run well above our goal for some time. If the public expects that inflation will remain low and stable over time, then, absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, inflation feeds in part on itself, so part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. One useful insight into how actual inflation may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. When inflation is low and stable, they are freer to focus their attention elsewhere. Former Chairman Alan Greenspan put it this way: For all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions. Of course, inflation has just about everyone's attention right now, which highlights a particular risk today. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with delay as high inflation becomes more entrenched in wage and price setting. The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that outcome by acting with resolve now. So, these lessons are guiding us as we use our tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done. Thank you.
What? That's it? I mean, he pretty much said nothing. Pretty much said nothing. And that was exactly what I thought would happen. I tweeted actually earlier today, I said, hard to believe that the market is looking for direction from one speech related to an event that is not even an official event in the calendar. I think we're making too much of this event. That's exactly what we got. He pretty much said nothing that we didn't know. He spoke for 8 minutes. Really? Yeah. And worst, he didn't even have a referral link to our stream, to our trading competition in his description. Crazy. Really, Powell said nothing. If we look at the charts, we're back to where we started. I think bullish. I think PCE is down. I think inflation's down. I said on the call today earlier, I said it's positioning us for bullish. He didn't say anything bad. And if he didn't say anything bad, I guess that's bullish, right? So I guess all in all, it's got to be bullish. It has to be. Let me know what you think. Shorts. Shorts are going to get killed. They're going to get roasted this weekend. How am I going in the competition? What? Altcoins dropped during that speech. The altcoins didn't like that. Altcoins didn't like that. Listen, I guess that's pretty much everything. That's pretty much it. A real nothing burger from Powell. And I think it was exactly what I expected. I said, I think people are taking this Jackson Hole thing too seriously. What happens next is we have the inflation numbers coming out sometime in mid-September. I think it's the 13th or the 14th of September. We've got the CPI numbers. Those CPI numbers come down. The Fed meets again at the end of September for the FOMC meeting. After that, there are 2 more FOMCs this year. Let's see what the probabilities are after Powell's speech. Remember that after Powell's speech, before Powell's speech, it was 54% to the 75 basis point rate hike. Let's see, it looks like, okay, now it went to the 50 basis point rate hike. So now it's more people in favor of 50 basis points, which means the market should be rallying, because if the markets think that interest rates are going to come down, you probably have a 10-year coming down, which is exactly what it's doing. So 10-year starting to come down, which means that Dixie should start coming down too. 107.65. Dixie is coming down. US NASDAQ is shooting up. Bitcoin is going to shoot up. Altcoins are going to follow. Bitcoin's going to shoot up. Altcoins are going to follow. Someone says, look at NEAR protocol. I'm open. There we go. That's much more like it. There we go. NEAR back up to 441. My long on NEAR starting to print. I think my Rune NEAR is going to print next, and my Cardano NEAR is going to print after that, because I think everything here is bullish. Again, let's look at how things changed since Powell spoke. Before Powell spoke, we had the PCE. The PCE was marginally down, which is a good sign. It means that inflation may have topped. Remember, PCE is what the Fed are using. Then you have, after the Powell speech, you have the US 10-year Treasury yield going down, not to the lows of the day. So it's very close to the lows of the day. You've got the dollar index down on the lows of the day. And in fact, let's just look at when the last time that we were at this level. They had 1 week lows, probably supporting the fact that this may be a double top as opposed to a higher high. Then you've got the NASDAQ. Let's look at the NASDAQ. Let's look at it not on the 3-minute chart, but where we're at. It's flat. It was down. It's flat. It was a little bit down. Now it's flat. And you've got Bitcoin back at 21,631. All in all, good. Not much else we can say from there. Someone's saying, let's look at the S&P. Hold on a second. Let me get us the S&P here. Okay, so it's the US 500. S&P flat. Nothing going on in the S&P. Nothing going on in the S&P. I think it's just a big nothing burger from Powell. Yeah, Bitcoin holding 21,650. I'm holding it. I've got to get into the top 10% of this competition very quickly. My near long is now starting to print, 17.9% up. My Thor chain long, my Rune long is still down. I think it's going to go up. And I think my ADA long is going to go get into the money now. And it's going to be an amazing weekend for everyone. Also an amazing weekend because it's my birthday, people. It's my birthday. That's why I'm having a whiskey here today. Happy birthday to me. So someone says check El Capo's last tweet. I want to check El Capo's last tweet, but I'm blocked. So I can't check El Capo's last tweet. Just some other news. So almost $2 billion set to expire in the ETH options. Now, interestingly, look at where these options are spread. So you've got call options as high as $5,000 on Ethereum. The concentration of call options is between 2,000 and 3,000 and 4,000. So that's the concentration. The max pain price is 1,600. So, it says El Capo says long ADA. I think he got the idea from me. I think he's been watching the show. Yeah. Then you look at the call, you look at the open interest by expiration, shows you that many more people are bullish about the merge than bearish. The put call ratio is very much in the line of for calls, so very bullish around the merge, and the merge is days away now. I mean, it's days away now. We did see this, which I mean, I don't know how reliable this person is, but the data is quite good. So there was an USD spike onto exchanges, right? So there was a USDT spike onto exchanges, and this guy says that usually when there's this USDT spike from this address, usually the price goes up. So it could mean that this person's using the USDT as leverage for trades. I mean, that's what he says. Also saw this. Samsung and SoftBank were the most active when it came to investing in the crypto space. They invested in investments in over 30 companies. Majority of the investments came from companies in finance and technology sectors. It kind of makes sense. We know Samsung's starting an exchange and they're starting to incorporate wallets into their phones, etc. So super bullish on that. Was there anything else today? I did see this. Very important.
Is that why it's $11,500, or is it just priced wrong? Somebody explain to me why this Dior shirt is $11,500.
Can someone explain to me why anybody would buy a shirt for $11,500?
Really? Is that why it's 11?
Why are you wearing it? And asking such terrible questions. Why are you wearing it? I think that's it. Let's do some Q&A. We do have some time here today. Let's do some Q&A. All right. I am watching my longs and my shorts. I'll put them up for you while we do some Q&A. Someone's saying S&P's dumping hard. I find it hard to believe. I mean, it's on zero. It's literally on zero. It's literally on zero. It's like 0.19. Okay. What's the token symbol?
ES1 exclamation mark.
ES1. Okay, the S&P mini futures.
It's not huge.
I mean, it's less than 1%. Everyone calm down.
You know, they look at the
Have your whiskeys and calm down. Have your whiskeys and calm down. What else is there? Ran, don't we have 2 to 3 years left until the next bull market? No. I think the next bull market is very soon if we're not already in it. Happy birthday. Thank you. Someone says play videos from yesterday. They're around school and getting people to sign up for school. So it's not really relevant for today. But if you do want to sign up for school, in the description here, there is a link. Use that link and sign up for school, because we are taking in 2,500 people. Last time we took in 500 people. So we had a 500 person cohort. And now we're taking in 2,500, and the next one will be 10,000, and then we're going to build our way up to 1 million people through crypto. A lot of people are asking, how old am I? Well, guess. Tell me in the comments how old you think I am. Do you follow Alex Becker? I do follow Alex Becker. Alex is a friend. Yeah, Alex is a friend. Ran, gift me $1,000 since it's your birthday. Cool. What's your account number? 69. I'm at 69. That's crazy. That's 69.
Craig says the ES1 is delayed on trading. That's why.
The ES1 is delayed on trading, you guys. You shouldn't be using the ES1. You should use the US 500. That's the one you should be watching. This is the one you should be watching, and it's flat. Nothing to worry about. The markets are flat. It means that we have to wait until the inflation numbers, in September. What's going on with my position here? I think I'm comfortable with my position. I know they're not doing very well now, but I'm comfortable with them. Should get Sheldon on the line. Let's get Sheldon on the line. See what he's doing.
Yeah.
Do you think he'll answer?
If I called him, he called me.
Let's see. Last time I did this, I gave away Sheldon's number. Told you, never answers, bro. Sheldon's on the racetrack. Or he's trading, one of the two. He's not answering, guys. He's not answering. All right, I'm going to leave you guys for the weekend. Have fun. Trade well, my friends. If anything happens in the markets, I won't be here because it's my birthday. I'll see you guys again on Monday. Big show on Monday. Also, by the way, I've managed to get Kucoin to agree to give us an interview. I think we may even get that interview sometime next week. So I have pinged him. Let's actually see if he's replied. He hasn't replied. He is keen to have us. He is keen to do it. But yeah, there we go. Okay, there we go. All righty. All right, I'll see you guys again on Monday. Until then, have fun and trade well, my friends. Have a great weekend.